All right. Hey, everyone. Thanks for joining here. Wanted to talk about kind of this Elon Musk Twitter takeover and what that looks like. So, there's been some pretty interesting evolution here on that over the last few days. And the New York Times has actually gotten a copy of the investor pitch deck that Elon put together, and they started to really summarize kind of the key points, value propositions that he's putting together as part of the fundraising efforts, essentially, that's taking place. So what I want to do is I want to actually walk everyone through what those key points are and kind of share a little bit about kind of my thoughts on what that looks like. So let's pull this up. Let me switch over into picture-in-picture. All right. So walking through the deck and the key points. So the big point Elon's really pushing towards by taking the company private is really growing revenue from Twitter. And so right now, Twitter's about a $5 billion annual revenue company. And his vision in the next 5 years, assuming acquisition closes end of 2022, going into 2023, is quintupling Twitter revenue. So 5xing Twitter revenue over the next 5 years. So really big numbers that they're chasing. It's going to require a lot of big kind of refocusing internally, driving a lot of more discipline around kind of the financials of the business, which I think is something that's been missing for a while here. Really time to run Twitter like an actual business here rather than just kind of a play money for investors. The next area that Elon talks about in the investor deck is really moving Twitter away from relying on advertising revenue. So trying to move that reliance and making that less than 50% of the overall revenue here. And so how does he do that? And so he's talking about really introducing subscriptions into the platform. And I think there's a number of different ways that'll be tackled. Right now there's Twitter Blue, and that's doing, I think we'll see that maybe $20 million. It's not substantial at all. But really what we're looking at is how do we drive more revenue from subscriptions within the platform? And if you're on Twitter today, a lot of those topics are kind of being floated around. And I think there's two really big areas that are an opportunity here. One is around corporations. So right now, companies can use the platform, really at no cost to reach millions and millions of users and followers. And there's big opportunity, I think, to put a paywall in front of businesses to, pay, $100 a year even, doesn't have to be much, but that'll drive, I think, substantial revenue there. And then the other's around influencers. So a number of folks on Twitter talking about really once you have a following, that's just absolute monetization opportunities for you. If you're able to talk to 5,000, 15,000, 20,000, 50,000, 100,000 folks, you're able to drive a lot of revenue for your business, sell courses, really monetize that opportunity. So even putting a cost per follower on that, maybe just a flat rate, that can drive a lot of revenue opportunities for the business there. And the other thing that's interesting that's called out in the pitch deck is around data licensing. So I imagine there's a lot of really interesting data that Twitter is maybe collecting today or could collect, and then could sell that information to advertisers, to marketers, to whoever, if they're able to really store and manage that information properly. And really, when you think about kind of basically what Tesla is, it's, manufacturing, but it is a data company. And so Elon really knows what that looks like and how to manage data at scale and really get the most out of that information. So I think a lot of interesting capabilities here that will come from kind of this renewed focus on driving profitability here. The next area I thought was interesting. I didn't know much about this, but right now Twitter has a payments business where you can, tip folks, you can subscribe to content. It does virtually no revenue. It's $15 million right now. And Elon's goal is to drive about $1.3 billion in revenue through payments over the next 5 years. And the Times calls out that, with his background at PayPal, really understands kind of those capabilities and services. And even if Jack Dorsey comes back to support this, his background in Square and really understanding that, there could be a lot of opportunity. I'm not sure kind of the money Facebook makes off of kind of Facebook payments, but I think there's interesting areas to explore there. The next is around increasing the revenue, average revenue per user. So right now, if you're looking at average revenue on the platform, it's like $24 per user. The goal is to raise that to $30 per user in the next 5 years. So that'll grow, I think, 100 million users today or something. But that won't get them to quintupling revenue. So really most of that revenue growth is going to be driven by new users into the platform. And that's going to be a big focus, I think, for the company moving forward, is how do we get more users? How do we calculate who's an actual active user? There's a lot of information out right now that Twitter's been miscounting that information of who's actually active within the platform, and come up with their own kind of definitions of that. I think that's one reason why there was a big push to actually close the deal or accept the offer from Elon Musk and not kind of shop that data around. And this goes towards that last point, is growing total users. So total users right now is 217 million. Want to grow that a little under 5x to almost 100 million in the next 5 years. So looking to add 700 million users. And what's interesting is really the focus on Twitter Blue here. So trying to add 100 million users over the next 5 years to that subscription model to the platform. So at 100 million users at $3 a pop, you're starting to really look at and grow revenue there. I think the next two areas are particularly intriguing. So Elon talks about a new product. He's calling it Product X, which is very in line with, I think, some of the other technology he puts out there. But projecting that to have 104 million users, there's really no information on what Product X is within this pitch deck. Maybe he spoke about it in kind of the conversations, but didn't really put it in writing, probably for obvious reasons. But looking to really release that at the end of 2023 with the goal to have 9 million users in the first year. So that'll be interesting. Exciting to see what that really looks like. Might be an ad-free experience for Twitter, as some speculate, or he hinted on Twitter himself, but that's something to look out for on how he's really planning to drive revenue out of the platform. The last two areas is around, Elon's looking to grow the company over the next few years, but first he's going to have to trim it down. And that's unfortunate for a lot of folks. But I think all of that is really around restructuring. How do we make sure we have folks focused on the right areas of the business? A lot of that's going to go towards engineering, design, really monetization, I imagine, within the product here. Ever since he announced kind of the bid to take over the company, I think I saw increase in applications to Twitter has risen. I think a lot of folks are behind what he's saying and kind of his vision here. So we'll see that kind of shake out. So it's going to get trimmed down a little bit, and then he'll continue to grow. And a lot of that's going to be in line with kind of the revenue the organization is making. So that's a big focus as part of this, is to raise that free cash flow. So right now, I think really kind of structuring the buyout process, but there's going to be a big focus on finances and overall company efficiency. How many employees do we have to the actual cash flow that we're putting out within the organization? So how do we actually like make money after we've paid all of our employees and kind of all the expenses we have as a business here? It's going to require a lot of a new culture amongst the management team on how the business is managed day to day. So I think you'll probably see a lot of key shakeups kind of at that top level. And I think the whole premise is the company's just become too bulky, and it costs too much to run the business relative to the actual cash that's being generated. So again, we'll start to see it tighten down, slim out, a new North Star put in place for the team to work towards and really be managed against here. And so, that's a quick look at, what we're seeing and kind of what's come out within the investor pitch deck. Would love to hear your thoughts and kind of opinions on what you're seeing out there. If you like this kind of content, definitely ask you like, subscribe, and we'll chat in the comments here. Awesome. Thanks so much.